What's going on, everybody in the chat? I'm back. I'm long and I'm strong and I'm looking for chickies. How's everybody doing? I'm joined today by the lovely Korypto Stylist, and John Wick will be joining us here shortly for some deep alpha. All right. So here she is.
Hello. Hi.
Hello, hello. How you doing?
I'm doing okay. How are you?
Fantastic. Glad to finally get this together. We've been
Yeah.
working on this, putting this together for a couple, like, what is it, a month or so? A couple months, maybe?
Yeah, a couple of months. We're just trying to get John, he's always the
Busy guy.
problem child. He's so busy. He's so busy doing I don't know what, but we finally got him to come on stream and he and I had a really nice chat yesterday, so I'm really looking forward to today. There's a lot of interesting information, some insider information, and also just I think he has a really great view on macroeconomic and the situation right now, because that's his world. But
I'm loving the new microphone, by the way.
oh, thank you, thank
It
you.
sounds
How
wonderful.
has life been for you since Vegas? So I don't know if
Yeah, so
everybody
we
knows, but I
yeah,
met
we
Axis
haven't seen
in
each other
Vegas.
since what's it been,
Yeah.
like a few months now, since September. And that was a wild, great time. We everybody got together, partied, and kind of enjoyed the bear market together, I guess. Something like that. And yeah, I mean it was cool. I met a lot of cool new people. I think that was the first time we got to meet in person, so that was awesome. And yeah, we haven't spoken that much since, just a couple times through text. And so yeah, I'm really just privileged and appreciate you for going that far and having that call with John yesterday to get some content ready for today. I've been working on the website axisALiVE.com, and I just actually got done producing a 2-day boot camp for market making and liquidity providing in Hex specifically, but also just talking about what that looks like, how to read those charts, how to get an edge on like all the different dynamics that goes into actually earning cash flow through and also talking about the obvious risks that's associated with liquidity providing. But if somebody doesn't do it, there's nothing to buy into or sell into, right? And so I think it's just an effort to educate the community on how to get a better uh, market environment so that big players can step in and actually accumulate some coins and not get this super high slippage, and
Mm.
have to like overpay for things or underpay for things because volatility is the price we pay. But if we can have a smoother market functioning, then it works better for everybody.
I heard from my friend Joe Venuto that the your boot camp was amazing. So he said thank you, and he gave really, really good feedback. How many people did you have joining?
We had over 100 signups.
Oh,
It
wow.
was it was really a good turnout. Yeah, and here's a stat for you guys. Guess how many of those people paid with cryptocurrency? Less than 20%. The majority of people would rather put their education on a credit card. So the proof is in the pudding, guys.
That's
They want to
fascinating.
they want to hoard their stuff, especially when the price is down 80% plus.
Yeah, it's expensive to pay with crypto right now, unless you're
Actually,
making
gas
use.
prices as we're sitting here, I'm seeing 78 gwei, which is like a new high. I haven't seen that high of gas in quite a while. So ETH must be doing something. I'm tempted to look and see. ETH and Bitcoin, yeah, they've been on the move, huh?
Oh yeah, I think post the Shanghai, the Chapella, I think that was really bullish for definitely for Ethereum because, and I talked about this yesterday with John, and he was saying that, for especially for like institutional money to see that you could state could be ended safely, that now they're going to be putting money into it systematically. And so that's just going to really that's just really exciting for Ethereum. And I think it's exciting for us too because I mean, basically, I mean, Hex runs on ETH, right? And PulseChain is a fork of Ethereum. So to see upgrades happen and they happen successfully and smoothly, that's good for us. So
Yep, it's good. So I don't know, are you in Europe or are you in the States or where are you at now?
I'm in London. I
You
live
are?
in London. I know you're not supposed to say where you live, but I've said it so many times that I might
Yeah.
as well say it. I sound American though, so and because I am American, but I live here. I've lived here for a long time. So
Do you,
I,
what's that like? I know like there's like a stigma around, you know, London in particular, just how expensive it is and like, whatever you're gonna hear negative about it, but there's got to be some good things too, right?
well, London's a really fun city, and I really like British people. I think that They have really nice manners, and it's and the humor. The humor, they're kind of self-deprecating and very witty.
Yeah.
It's sarcastic. I see Hexagon Girl in the chat. She's one of my favorite. I love her. It's just fun. I like the people here a lot, and the fashion scene, because I work in fashion. The fashion scene here is incredible. We're really close to Europe. It's really easy to travel there. So that's what, the weather is amazing here. Yes. She's being sarcastic. It's really, the weather's
I was
horrible.
gonna
That's
say
the
that
only
I didn't believe her.
It's
Gray
horrible.
and
Like, it's
rainy.
horrible. It
Yeah.
rains 90% of the time. And the
All right.
winter is like
Well,
10 months.
I mean, I'm a crypto degen, so that might work for me. I don't know. I've actually had Silver the Antidote's been saying, come to London in May. There's a get together going on. I want to give you the lowdown on what's going on Hex. So who knows?
Yeah,
Maybe.
you should come. You should come. There's a lot of hexagons here. We've had a couple of meetups when, I think when RG3 was here, there was one when Funding Gym was here, and a lot of people showed up. I went, I didn't know half the people, which, that's a good sign.
Hmm.
There's a lot of new people, new faces from one time to the next. I've been to two meetups.
Yeah, the community is huge and it's growing too. As much
Yeah.
as people want to try to act like a little dip from 13 cents to whatever 7 cents is a big deal, it's like it's all perspective. Like I was just scrolling through Twitter the last couple of days and all I see is just like, oh, I thought all-time high is next week. It's like, no, who's saying that? Just like things go misunderstood a lot of
I
times.
think
But
that I think in this period of time, just because we're so, oh, so that's my dog. We're so close
hello there,
to
pup.
Pulse. Yeah, this is Junia, my dog. We're so close to the Pulse chain launch that people are just so impatient because they're just waiting for it to happen. So anything that goes in the wrong direction or anything that's like a slight delay is just so exaggerated right now. It's a very dramatic time in our
Yeah.
community.
Yeah, and like just on the hex price itself, as the price was running up at each different stop on the way, it was always tied to some fundamental news event or the depegging of the USDC, stuff like that was like really driving price more than just, natural adoption until the end of the run, right? In the last 20 to 50% at the end, right? When testnet v3 launches, then all the new people flood in behind and the volumes spike through the roof. And I actually put a tweet out that showed that relationship about how people do really chase green candles.
They do.
It's pretty fascinating,
I
which gives
mean,
me a lot of hope.
my friends and family, like literally when that run up was happening and it was like at 11 cents, it was when they were calling me like, should I buy Hex? And I'm like, did you dump it? Like, yeah, I dumped it a long time ago, like when it went down so low. I'm like, this is exactly what you're not supposed to do. You are selling the bottom and you're buying. I mean, it's still a good price. I'm like, get in, but stop doing that. But yeah, they call, my phone starts ringing when it becomes expensive. That is just human nature.
Hmm. Yeah, I heard the same thing from let's say name dropping some people. Do Hawks, Dustin Hawks, how all of his big friends were starting to call in once the price went past 8. And it sucks because it's like you try to tell people when it's cheap and boring that that's the best time to buy, and when you're seeing those capitulation lows at like 1.5 cents, and your gut is like, oh, you're sick to your stomach, and you're like not feeling good, but that is exactly the time that you should really go hard into something if you know it's going to be
Exactly.
here for the long term. And it was
Exactly.
hard for everybody because I think everybody was so strapped, and I think that's part of the stress with the PulseChain launch is how many people put so much time, effort, and attention and monetary might into that future promise, right? Or I mean, you could say it's not, but the looking forward that oh, this thing's going to be worth something big one day, but then the waiting part has left people high and dry, so to speak. But I think it's the ultimate test of diamond hands, but I think it's also going to be long term super good for price because a lot of the people that have been waiting are basically forced to sell early now when the thing launches. And so whatever happens in the beginning, just kind of take it with a grain of salt because there's going to be a lot of people that are over leveraged and they have to sell at the first 2x or 5x or 10x. And so it's going to be very volatile. But if you, for example, if you put in some liquidity into the LP pools and you just set like Pulse X
Mhm.
against Pulse and just put it in there, not your whole bag maybe, but a percentage, and you just let that stuff ride for a year, just imagine the amount of incentive token you'll farm and then all of the fees that you'll accrue over that time frame. Like we went back and we looked on Hex. One of the largest positions in Hex in terms of LP was a position that's been in since all the way back 680 or so days, and it was set between 3 cents and 5.5 cents, and it's never moved. And it acted like an anchor point in the system where, yes, Hex went way up to 50 cents, and then came way back down to 1.5 cents, and then went way back to 13 cents. And the whole time, this guy was unaffected. Dude left the position in there. That $2.8 million of USDC that's sitting there now also accrued $1.8 million in fees.
That's amazing.
Yeah.
It's
So
really
the
amazing.
power to the players, and that's about shows you the power of patience.
It's true. Though, so I know a lot of people are saying that, because it's been so long, such a long wait for the launch of PulseChain, and a lot of people put more than maybe they should have, especially given that this is such a long period of time that they've had to wait, that there are going to be people who are going to have to sell as soon as this launches because they're going to need the cash. They're strapped. But I also think that the counter argument to that is that there is such a large number of people who now know about PulseChain but weren't able to get in, who are so dying to get a position on it. I think it'll be interesting to see if that's enough to counteract the dump that's going to happen in the beginning from the people who are over leveraged. I think that's going to be really
I think
interesting
you're
to
right.
see.
I think that what proved that to me was the PulseX sacrifice numbers. That
Exactly.
they were 3-to-1 number of people that got into that sacrifice phase, and that was their way of trying to get exposure to the ecosystem before the bridge goes live, because
And
then they're going to
Axis,
be
that
able
was
to.
over a year ago. And now
Right.
look at how many things have happened, how many influencers are, that are talking about Hex who didn't talk about Hex before, who have, hundreds of thousands of followers. Even Richard himself, his following has grown. There's so many content creators. I just think that I think that people underestimate that the buy pressure that's going to be on PulseChain when it launches. I mean, I'm not being like, obviously we don't know what's going to happen and it will be extremely volatile, but I just, from everyone that I know, they really, even more than Hex, they really want to get in a position in PulseChain. So they're just like,
I'm
what do I
hearing the
do?
same
How do
thing.
I get in? I know a lot of people, and the people that I know are not even super into crypto. So I don't know. I'm pretty
Bullish.
bullish about it.
John Wick, my brother, we're joined by the legend, bringing you in now. What's going on?
Hey, John.
Hey, can you guys hear me?
Yeah, we can
Yep.
hear you.
Sweet. All right, I got my streaming set up now, so I don't have to worry about audio issues because people complain about that
Yeah.
last few times.
All right. Well,
So,
you sound loud and proud today. And
nice.
Korypto Stylist told me that you guys had a little bit of a premeditated call and got some
Yeah,
deep knowledge on
yeah,
the docket for today. So I'm pretty excited to hear, kind of what that all looks like too.
yeah. I'm excited too. Well, I mean, it's always fun talking with Korypto. So, so in depth, and she doesn't give herself a lot of credit, but she knows a lot and very smart about this stuff. So,
Oh,
I
thank
know we
you.
really
looking forward to it.
hmm
Yeah.
Not enough women in Hex get enough publicity, so I figured why not? Let's do this. Let's put her on the spotlight and get all of her hot takes.
I'm gonna send this to a couple peeps. So can you send me the link to the
Sure.
stream? Okay, thanks.
What was I gonna say? Well, I guess we could just say get a quick rundown on what you've been up to while I'm doing that.
Yeah.
All right, I sent it to your Telegram.
Thanks.
Oh, whoops. Hold on a sec. So what have you been up to? What's life like? I haven't talked to you since Vegas of 2021.
Yeah, I met you. Yeah, we met.
Right.
That was like the first. Yeah, almost a year into it or so, maybe a year and a half into it. But life's been good since then. Thanks for the link. I just got it. Just been still working and just organizing my life and enjoying life and just going through the bear market. It's been rough. Price wise for everything, like 2022 was just such a bad year for everything. Growth stocks, value stocks, bonds, crypto, literally everything went down in 2022. So it was a rough year, but a lot of people in my circles, my clients and stuff, we've been doing pretty well, just kind of holding for the long term still and trying to keep a level head. But you know, there's been a lot of activity too, a lot of cool stuff. Not cool, but a lot of like drama and stuff has happened lately, right? With the Luna, you know, the UST collapse, all those arrests going on, the privacy protocol getting shut down, all the like the Gary Gensler stuff, Elizabeth Warren trying to crack down on crypto. And then obviously this FTX and Celsius stuff is crazy too, which all happened in the last year or two. So it's been a wild bear market, but I was talking to Crypto yesterday about it. I think this is still like the accumulation phase, though. I don't think we're on full on back on bull, and this is kind of mimicking what Ethereum did in 2019 or 2018 was 2022, and then now 2023 is basically 2019, what Ethereum was doing back then. So yeah, that's pretty much.
And your mic is hot.
Sorry.
Fusion Streams is saying your mic is hot. It's probably just a little bit louder than us. Just
okay.
If you can bring it down a little bit, but if not, it's okay. Sounds okay for me. Yeah, I agree with you. I think the bear market's been wild, and I actually saw a video recently of it was Caitlin Long. So she tried creating this bank called Custodia Bank, which was going to basically be backed like 110% with crypto reserves to all whatever comes out of there, so that when they went to so it was like a first of its kind bank, right? That's got full reserve backed asset backing, right? And so they tried to apply for a federal banking license and they got denied, right? And so it's like the question is like, well, why would you deny a bank that's going to be fully backed? And anyways, go back to Bitcoin conference last fall. She's on stage with FTX CEO Sam Bankman-Fried, and she's talking about the dangers of leverage and how Satoshi designed Bitcoin so it didn't have leverage actually built into the protocol for a reason, and that it was supposed to be a form of sound money to counteract any banking failures that would come in the future. And then Sam's basically saying, well, if you're gonna complain about the downside, then you have to appreciate the upside that we got in that rapid ascent from the 3K low after COVID all the way up to $60,000+. And I think my take on that whole thing is like when I look at the price charts of Bitcoin in particular, like the difference between the 2018, 19, 20 cycle versus the 15, 16, 17 cycle was that 15, 16, and 17 was a gradual natural parabolic curve that was like like the price had more time to create structure in the chart. It allowed more people to come into the ecosystem at a more fair price and gave a long trajectory for a nice clean bull run with a blow off top. But this leverage that was in the system between 18 and 2020, 2021, it created all these volatile ups and downs in the price charts of both Bitcoin and Ethereum. And it really gave an edge to the exchanges that wasn't fair in terms of what retail could get from spot or even just like other hedge funds coming in to accumulate large amounts, right? So the question for me is like, or the question I'm posing is like, do you think that this looks like to be more of like a 2015 bottoming period where we do actually have this gradual accumulation as we go up the chart into like potentially 2024 and 5? Or do you think that this is going to be more like all the leverage that we saw in the past now that all that stuff's been blown up?
That's a long question. I mean, it's what do you want to hone in on first? Let's kind of try to narrow it down a little first.
Well, can I pull up the chart and we'll just kind of take a look at it?
Yeah.
All right, cool. Also, Korypto Stylist, is this your first, when did you first start getting into crypto?
PulseChain launch.
Okay,
that was my first crypto investment.
Okay. So that was in the summer of 21. Okay, so you didn't even get to experience the other one yet. Okay.
Nope.
You did get to see the run up though, right?
I mean, a bear.
That sucks.
I bought all the techs on the run up from 17 cents to 55, and then I was so nervous that it was going to go to like $10, and then it didn't.
I mean, it can still go to $10 though. Just it's like everyone's been telling you for 2 years. Hey, by the way, it can still go to $10.
and then I got everyone to sacrifice for PulseX, and they're like,
nice.
"Is this thing gonna launch?"
Yeah.
And then so now you look like the scammer.
Yeah.
But
hey, man, patience.
But to be fair, you never really know when a top is, you know, like so few people actually hit the top, especially in crypto. It's just so volatile, and you it's people are. I guess I'm always afraid of selling too early, you
Mhm.
know, or of any asset you hold, just because it's like, you know, it's the no one would have expected, you know, even Bitcoin to get to 50, 60K now, you know, even 5, 10 years ago. So it's like, but yet here we are, and it's bouncing back, you know, off 15K. It's already up 100% off the lows, and looks like already created a bottom, you know. So
Mhm.
it's
I
just
mean, to
hard
give
to time the markets, but
yeah,
DCA is a good strategy. So I'm glad you're DCAing.
it is. I mean, to give perspective, there was a point where I was like, all I care about is if I can get 100,000 hex, because that would have cost what, $50,000 at the time? Like, what is it? It was so expensive. So I was
Mhm.
like, okay, well, that's my goal is just to get 100,000 hex. So I was so grateful when it went down to 2 cents that I literally did everything I could and put everything I could into at that price because I was so appreciative that I could get a much better position on hex than when it was at 50 cents. So,
That's such a good point, and you see that all the time where the prices of these assets get so astronomically high that you're really not getting much out of it in terms of like compared to the people that came before you. And so
mhm.
that's what the benefit is to getting the downside. And most people forget that, and they see the swings and they think that that's a bad thing. And I think it's good that you're bringing that to light. Like the opportunity that you get on a 90% drop. And look at Bitcoin this time didn't even give you guys more than a 77% drop. And so it's showing you how over time you won't get as good of deals on Hex if Hex plays out like Bitcoin did. Each cycle it's had a weaker drop to the downside.
Yeah. Yes, you also, there's a con to that, is you get less of a pump every cycle, right? So
Yep. Yep.
I mean, if
Which I think, for into the case of Hex, the benefit is that you can actually get yield from it still. So like you can
Mhm.
hedge and multiply your returns on that side of the equation in terms instead of just always relying on strict price performance. In the old days, it was you had to rely on mining to get more of the coin.
yeah,
And now it's like, okay, well, you can just, stake mine through time and just get more coin. And then it amplifies the pump. Even if the pump is less, we're still early enough in Hex's life cycle that even if it
yeah,
only does 100 or 500x or something going into the future, it's actually might be double that if you staked properly. And we had that forward thinking,
mhm,
thinking 1, 2 cycles ahead, like a lot of the
yeah,
OGs did.
yeah, absolutely. I mean, if you stake long and if you had stakes early before big payday, it's the APY you're earning is outrageous, and it's only going to go up over time. You know, so that does help with some of the potential, yeah, the cycling effect, where the elongating cycles effect, where you get less of a pump. But in this case, you know, at least now Ethereum has staking, but prior to that, it was just price performance. But with Hex, we're getting high interest, a share of the revenue of the penalties, also the copy of PulseChain too. You know, that's just, it's a very nice value proposition. Um, from a gain standpoint, even though, yes, this next cycle, um, you know, might have more selling pressure on the way up, more resistance on the way up, because you have a lot of bag holders who bought at 20 cents, 30 cents, 40 cents, 50 cents for the first time. And unfortunately, not everyone DCAs. But if you don't DCA in the bear market, then no one can help you really. If you just held at, you know, all the way, then it's like, or if you didn't have any capital, then there's nothing you can do. But for the most part, yeah, if you still believe in something, and then if you're getting a 98% discount on it, while it still pays out the yield and it still has all the functionalities of it still operate as intended, then that's actually a gift. And people that bought in the 1 cent, 2 cent, 3 cent range, you know, already saw 400% returns in this year to date. So um, crypto, obviously, there's a lot of opportunity, but of course the volatility is there. But the volatility can benefit you, you know, if you have a long enough time horizon,
Hmm.
and you know that usually is at least a couple years for most people. And also the long-term capital gains is a factor too. So you know, why would you hold anything less than a year if you don't have, you know, if you can, just for that benefit, at least in the U.S.
Mm.
So yeah.
I was going to bring up that comment too about what's your guys' potential tax situation look like, and looking forward into the gains that you'll be getting on PulseX Hex in the future. Is there something that you're doing within your jurisdiction to change that or to get some sort of advantage tax wise?
there's things you can do, like crypto IRAs, 401ks, and stuff like that, which is tax deferred, which is nice. If you can do that and have the technicality and understanding how to do that, it's pretty cool. So that's mainly my focus. But yeah, I mean, holding at least a year is generally going to benefit people in most U.S. jurisdictions. But a lot of people do the trusts as well. I know
Yeah, the trust.
MCA, they do like the trust stuff and a lot of the revocable/irrevocable trusts. So it's like out of your estate, and then you're technically protected, or your heirs are more protected, or you're more protected from creditors or anything in the future, like risks. So there's like that stuff, but that's kind of more sophisticated and like personal.
Yeah, probably a little bit too in depth for this conversation, but just
Yeah.
something to think about if that's,
Yeah.
if you're listening in and that's something that you're interested in, there are options out there. And if you are expecting to see mad
Oh.
returns, and you're looking to cash out in the future, that's something you might want to look into.
I will mention real
go
quick,
ahead.
just because I had a note on it, is there's also exposure that people can get crypto, just through their brokerage account by buying the Grayscale trusts. So because if you have just like a retirement vehicle, let's say with Fidelity or E-Traders, Schwab, you can buy these tickers and get exposure to crypto, inside a retirement account too. That's a way to get tax beneficial exposure to crypto, and it happens to be traded at over a 50% discount to NAV. So that's kind of nice too, if you like that type of thing.
It makes me think of Hedron and Icosa too, how those are so discounted relative to what you can get T-shares for off market by buying hex and staking. So there's opportunities in both ecosystem. Yeah.
I think that some
But
people
the
are
problem
looking.
with that is though.
Go ahead.
Go ahead. Sorry.
I think that some people are looking
Sorry.
for
Last thing is
a tax advantage from using liquid loans and earn and fiat. So the loan protocols, so that they take it out, it's not income, it's a loan.
True. Yeah. Big one.
That's another way to offload and to cash out if you can't wait a year.
and all the potential protocols too on PulseChain that may or may not allow like lending and borrowing and stuff like that too, can be more tax advantage. Can be.
Is there something else you wanted to add then, or want me to just push this?
No, go ahead.
So this chart here is BTC on the left. So we were going to talk about how BTC cycle now is like kind of more representative of the 2015 cycle. So if I just throw that on here quick, I'll have them both. You can see Hex down here and BTC on here. And even though Hex has done a 10,000x in returns, it did it on relatively a low amount of users. So there's just a few users left that have big bags that need to redistribute those to the rest of the world effectively. But once that redistribution is done, this is going to become like a slow grind up until we break those highs, like you were saying. And so the reason why I even brought it up in the first place was just generally to show people how this 2015 cycle, if you take the fractal from the low up to the top, and how this is so similar, and like how Bitcoin could literally just be at that phase now where we've already kicked off the bull run, but it's just going to be a long grind. So that means that you would actually see 25K to 35K all the way out to like October this year, and then maybe we make a move higher in October and November this year and go try to take out that 45 level, and then maybe base sideways again for like until mid-summer of 2024, and then you actually start to get a move into higher and higher price ranges. That's one theoretical way, and that's why in the beginning I kind of spoke on whether or not you thought this was more like 2019 or 2015. Because then structurally, that's what I'm seeing right now, is that this is playing out more like 2015. So if I take the 2019 cycle, it's actually much more parabolic, and it would have had us already getting toward that. It's in yellow. You would have went to a low. You wouldn't have went quite as low, but then you would have peaked somewhere between 45 and 55K, and then we would have spent the rest of this year crashing. But we haven't done that. It's just been a grind slowly higher, and a lot of that's been spot buying of Bitcoin that's been taken off the exchanges and been housed by big people that believe in this long term. I mean, I know like Bitcoin gets a lot of flack for like, oh, it's only going to do a 3x this cycle or 4x, right? But that's in a market where you can trade trillions of dollars of liquidity over a year to a year and a half. So if you come in with $500 million and you turn it into $2 billion, is that really a big loss for you because you didn't get 100x on Hex? Probably not, because if you did that in Hex, you would never be able to pull out that size because the hex market is still maturing. It still has opportunity in it, right? And I think that's the point here that I'm trying to bring up is like if we get a cycle more like 2015 for hex where the coin is traded all on chain with, between PulseChain and ETH, disregarding the fact that you're having to split buy energy between two chains, just assuming that they're binded together and they do somewhat move together, you're going to get this event where it's going to be a gradual parabolic rise leading into this insane blow off moment in 2025 and or 2026, right? And so that's why the price targets can be so high. So like basically the way I did, two ways I did this was I took Bitcoin's first cycle here in yellow and just paired it up against hex. Well, then this would have hex basically, going sideways out until like August, September this year before that next leg up. And then maybe, going into next spring, summers when we'd really get the parabolic rise for maybe a double bubble top going into 25, or maybe instead of it being like that, maybe it's more like 2015, right? Where you get like that bottoming effect and then you just come out of this level here. And we spend, 6 months it's going sideways. Then again, September, August, October, you get the rise out. Now this is dependent on PulseChain launch because that can affect the price chart. And we've seen that actually proven out now how testnet announcements have affected the price chart, right? Like you get an announcement that it's coming sooner, you get a pump, and that worked really well. That and the depegging of the stable coins, that worked really well to give hex extra legs that it might not have otherwise had, leading up to that recent 13-cent top. And so now it's like, well, what fundamental news are we going to get that's going to keep the excitement in hex? And so because in the event that there isn't any, then I'm comfortable saying that you can spend some months going sideways in a new accumulation range that tries to hold 4 and 5 cents as support. But either way, when you look at these trends, and if hex plays anything like Bitcoin did, you're still targeting like the $10 range potentially by the end of the decade, and that's like a really conservative estimate.
So wow. So do you think it's going to be more of a rounded rise coming out of this cycle, out of this? I mean, PulseChain is the big determining factor, right? So that could make any.
Like this is what I'm thinking. So and you tell me what you guys think about this. A couple things to think about here, and I just had this thought yesterday. This price action here reminds me a lot of this price action here in terms of structure. The difference is that we got big payday, but we didn't get PulseChain launch. So there was a fundamental event in both cases. One happened and one didn't happen. So I'm thinking that if you would have gotten PulseChain here, you would have at least came up and tested the PulseX SAC high, right? 35 cents. And
yeah, probably.
And so then I took this a step further, and I was like, well, what happens if you just played this out from here and you never really got the big payday, for example, that the traders jumping in and hyping it up? Then you would have effectively not gotten a run up leading into that event. And potentially, if there was no bid support here, which we did have, right? If we didn't have it, then you would have actually came back and retested these levels down here.
That was the God whale pump right there.
Right. And I think this is where you would have found structure and came back up and made our way to a penny and beyond. But so my thinking here is that we're just getting rid of we're basically getting rid of all the weak hands. Obviously, that's kind of obvious by now. But so I'm at this position now where we've tapped this once, twice, 3 times. We tapped the bottom once, twice, 3 times. I believe the bottom's in on hex, but this is a pennant, and the pennant is a neutral pattern structure, so it can still do this for some time leading into mid-end summer before we finally do get out of here and start to build like new adoption comes in. And that's where I'm kind of wondering, based on what you guys talked about yesterday and what you're seeing in terms of PulseChain launch, does this, whether or not this kind of a time frame is looking reasonable to you guys before we get PulseChain and potentially start moving higher?
Yeah, I mean, I think your assessment is actually fairly reasonable, because I've definitely seen some moon math in the community and stuff, but I think the bottom for sure is in at 1.7 cents, because if we even tested 4 or 5, there would be so much buy pressure on the sidelines, just like be like, wow, this is a no-brainer, and I think we wouldn't get to that point. But also, liquidity is thin right now because people are waiting for PulseChain or anticipating it soon, and they don't want to be caught with the snapshot or when it forks, holding coins in LP, which may or may not get copied, or there may be issues with it. So it's traded pretty thinly, and obviously any whale could do a huge wick on the hex chart to the downside, at any moment, especially with the current conditions. But they would just be shooting themselves in the foot, so it doesn't really make sense. But from my suspicion, I have no information, but my suspicion, and kind of reading the tea leaves, is PulseChain. Richard's trying to launch PulseChain much sooner than later, and he's actually like back grinding and trying to like get it done as soon as possible. Not minimum viable product, but like with all the specs and parameters laid out, and with all the liquidity and the farming pools created at launch, and all the ratio trading environment that can exist at zero value, which is key, right? It's launching at zero value, and then after some time, having the bridges and all that, and then really kind of jumpstart the ecosystem. So if that's the case, we could launch in potentially, mid-May of 2023, right? Because Richard never really said the year; he just said potentially mid-May, right? Last year. So I think that's the optimistic side. It definitely could take longer, but if it did take longer, that would line up with your chart as the pennant, and maybe we would just chop around until that happens, and then we can kind of have price discovery again once the launch happens or once the fork happens.
Anything you want to add, Korypto Stylist?
Yeah, I mean, I agree. I think the bottom is in, and I don't think that, I think we're going to go sideways until the community has a clear view of an imminent launch. I think it's going to kind of bounce around a little bit, but I don't think it's going to go. I would love for it to go below 5 cents, but I don't really see it going below 5 cents, because to anyone who knows even a little bit about what's about to happen, that's just such a clear opportunity to get not only hex at a cheap price before it goes parabolic, but also you're going to get the copy. So I think just because it's so imminent that the price won't go back down to the one. I think the bottom is in for sure.
Yeah. So I'm going to show you guys what happened to Tesla. Let's see if I can find it. When Tesla announced a stock split last year, let's see, when was this? Like 2020, I think this was 2012 when this happened. Okay, here it is. So I'm pretty sure they announced a stock split here on this bottom. And then, so then this became a new accumulation range inside of this triangle. And big money bought here in anticipation of the stock split. The price ran up 50%. And then there was 1, 2, 3 chances to exit that before it ended up selling down with like the macro problems that was going on. But the point here, and me showing you what Tesla did before a stock split, is that typically stock splits in legacy, or when copies come out in crypto, there's like a run up that leads into the event. We even saw that with like Bitcoin Cash and things like that in the past.
Mm-hmm.
And then, so with in terms of like the hex chart now, let's throw on the liquidity pools. How much experience, Korypto, do you have looking at these pools, John? I'm not sure if you've looked at them a lot or not either. I really don't know. I'll go daily.
I watch your streams. That's about as much exposure as I have to looking at these pools, but I don't look at them in my free time.
Okay. Well, I won't fault you there. It's kind of boring, and unless you're actively like managing a position or something, I guess.
Yeah.
But
I have experience with it.
Okay.
Doing it, but yeah, it's definitely more of a full-time job than it seems.
Yeah.
Just because it is thin, and people can basically hunt your positions depending on what their motivation is. So if you're not into that, then you don't really need to do it. But because you can lose money too.
Yeah.
So,
the reason why I bring it up is more just to like show the viewers the differences in what I'm seeing in this. Just to quickly, briefly explain what these bars are on the right here. I've outlined here for you what I would call the anchor. So the anchor is a position of liquidity. It's like $2 million that's sitting here in this block, and this has not moved in 600 days. And this is basically, this has been it's an anchor point in the ecosystem of trading range between 3.2 cents and 5.4 cents. And I do fully expect this position to stay solid in the ecosystem forever. But because it's so solid, and because this run up was so fast, you can see here how the price just it got above that level here and then just exploded up to 13 cents in almost no time, because the liquidity was so thin up here. But now the liquidity has been restructured, and you can see how thick these bands are that goes through here. This is where the market is putting liquidity to try to make money in fees and support the market. And so there's two pools here. The yellow pools is the 1% fee pool, which is where big bags go to provide their liquidity. So they are incentivized to put, hundreds of thousands or millions of dollars into those pools with a higher fee, so that they are incentivized to do that and provide something for people to trade and sell into and out of. And then the 0.3% pool is where most of the volume comes through, and that's where like everyone else floods in and puts liquidity for people to trade in and trade out of. And this was stuff that was covered in my most recent course. So, but if I'm going to take away the 1% pool, the yellow bars, because less volume goes through there. I want to say there was only $600,000 of volume that went through there in the last day or so. So I'm going to take that down. But where the millions of dollars is flowing through is the blue pools. And you can see here how the price is currently sitting on what's left of the thicker liquidity. And so this is all hex. All of this up here is hex, and around this blue area in here. And so a whale can come in and they can absorb all of the supply inside of this range. As a matter of fact, I think there's probably like 140 or 150 million hex sitting in the pools above this range. And so for them, they're faced with the decision of, do I let the price slip quickly down into the anchor position here, and then I get to accumulate this range here, which is where we all think that the price will be defended around 4 and 5 cents. Because, and what I mean is that whales will get to step in here and absorb much more of the supply that gets sold off on this sell-off because of the lack of liquidity here. And then they'll be able to get much more of the supply without slipping the price up. So they'll be able to acquire potentially hundreds of millions of hex right here between 4 and 5 cents without slipping the price back up to 8 cents. So they'll be paying less and getting more supply. But the downside is that if you're looking to sell heavily, the upside is that you'll get to sell heavily into this range, but the chances of it going lower is slim. So it's like a battle of getting the best price, because we can all agree that the bottom's in and that we're heading on to clearer skies in the near term. And so this sell-off is going to be mitigated by anyone that wants to come in and accumulate inside of the thicker ranges. I don't know what else to add into that other than just to show you that there is not a lot of liquidity here between 6.9 cents and 5.4 cents. So this bearish pennant, you can see I have this diagram here, has the price breaking down and it coming off the high, breaks down into the pennant, breaks down. And then this is kind of a quick slippage zone. So price can quickly fall from 6.9 back into the thicker bands here at 5.4 and lower. And then this can become a new accumulation range where potentially 200 million or 300 million hex gets deposited back into the pools and it can be absorbed by large players. And we saw that back here where Godwell stepped in here and accumulated over 90 million hex in 2.5 days.
Very nice of him. But this is just including just USDC pair, right? Because there's ETH, there's all the derivatives, Hedron, etc., right? So as you sell or the price moves, there's going to be bots arbitraging the difference, making that little spread. So that's the main pair, right? But as a percentage, how much of the volume is USDC?
Hex to ETH is actually the main pair right now in terms of volume.
Okay, wow.
So
actually, wow.
It's like, so in the last 7 days, we've done $25 million of volume in the ETH pair and only 16 million in the USDC pair. And everything less than that, it's negligible. Like, and to be honest with everybody in the community, there's no volume going through anything else besides USDC and ETH. Just, it's so negligible, it's not even worth talking about.
Yeah.
The one exception here is that the DAI pair that got made on the recent run up, that's seeing a little bit. You can see $300,000 is locked in there, and it did $20,000 in volume in the last 24 hours. But generally speaking, these ETH and USDC 0.3% pairs is where everything's coming in and out of. And
so do you have a chart that shows the ETH liquidity laid on across the chart?
No, because no one's made that yet for TradingView, so you can't actually get the. So this is made by a guy named Emmy Bop, and he's on Twitter. So if you're interested in that, please go check him out on Twitter. but he's only got the USDC pool made for now, but he is working on automating this and adding the ether to the pool. And so we have to actually go look at it from here on the uniswap.info page to see it. But there's just so much overhead exit liquidity being set here in terms of what people want to convert. You know, they're just setting liquidity. So this is overhead resistance potentially, but another way to look at it is it's an opportunity for an ETH whale to absorb potentially 40 million hex of supply. But that's not a very big appetite though. Like I think an ETH whale would rather step in when there's maybe 100 million or 150 million hex in here. So they could get it, they can allow price to continue to slip down. And then as this liquidity gets repositioned backwards, price slips down. This liquidity gets repositioned backwards, price slips down. Eventually this will end up leading to a point where there's 100 million, 150 million hex in this pool if it gets to that point, and somebody will step in and absorb a lot of that supply, as had occurred last fall with the Godwill.
Yeah, and there's one wallet that had like 10,000 ETH in it that used 1,500 of it to buy hex not too long ago. Right now it still has 8,400 ETH in it, which is like 17 mil.
Yep,
So that's kind of nice.
And
Hopefully they keep
he
buying.
bought twice and staked. His first buy was at 5.2 cents, and the second buy was at 8.1 cents, I believe. And both of those buys were staked.
Yeah.
And so
Not too long though. Let me see.
No, till May 6th, I believe. So that guy's, you know, if this guy's a true Genesis whale that's coming in for the first time, he's going to see the power of the system. And I'm willing to bet that this probably isn't his only bag. And he's probably going to buy more in that 5.2 cent range where his first initial buy was. Not saying he will. I don't know. Obviously I don't know the guy, but I'm just saying that assuming that if he likes what he's seeing with the hex contract, you know, he can absorb a lot of the supply down here.
Yeah.
And in terms of like overhead resistance, in terms of like wallets that I'm seeing on chain, and the info I'm getting is there is a lot of people like that still want to sell hex. Like this guy here has been dumping hex for Zen for the last like 14 days. Just hundreds of thousands and millions of hex is being dumped into Zen. And this is good because this is a redistribution of hex from somebody who doesn't value it or is looking for a quick return somewhere else and into the hands of the market. And so the market can, that guy won't hold us back in the future.
Yeah.
Let's see what else we got for topics. Oh, we didn't talk about, I'll pull this chart down for a little bit. We'll just have a chat. What do you guys think about Operation Choke Point, which is basically how this current U.S. administration is trying to prevent any kind of growth in the crypto sector, in terms of, you know, issuing subpoenas and suits against like Bittrex exchange here in the States, or Coinbase under fire for a lending program. Kraken had to pay a big settlement fee. Where do you guys thinking? Where's your brains at on that whole thing, and how does it affect this upcoming next couple of years?
I think that, you know, the fact that there are regulators who are basically overreaching the authority that they're given by the law to cut people or cut an industry off from the banking system to cripple them. I mean, that's a clear violation of due process. You know, Richard retweeted a podcast by a guy named David Thompson, and he's a lawyer who specializes in due process law. He did the case with the payday lending industry, and that they were cut off in a similar manner that crypto is being right now. And he just went through. It's a really, really good. It's on his. He retweeted it, and it's has a really good breakdown of all the reasons why it's unconstitutional. And you know, the government's just not allowed to take away your property, which would be your banking relationship or your right to banking, without notice and an opportunity to be heard. And both are you're literally like in any interference by the government or a regulator to make you look bad or to get you blacklisted by a bank that results in the loss of that banking relationship, you actually have the grounds now to make a case that there's been a violation of due process. So there's like such a clear law that protects, you know, that this is such a violation of that, and people don't know that. And so I think I think information is just so powerful here, and I think it's so important. So I've retweeted that tweet that Richard on my own Twitter, and then I've sent it to a few people. I asked Coffee to stream about it because it's just a very simple explanation that anyone can understand, and it's just very it's clear. That's my point of view on it.
Thank you. What about you, John?
I think a lot of the time they're trying to crack down. It's kind of a response to like FTX and Celsius and kind of these mismanaged companies that people kind of need a scapegoat for, who to blame, what to blame. Elizabeth Warren can just basically say all of crypto is bad now. It should be banned, or it should be regulated. And sometimes they bring up good points, right? There's some arguments that are actually valid, I would assume, right? Like Coinbase technically was, according to the law, running illegal securities, doing illegal securities products by doing staking. Just because it's essentially like an investment contract, and any investment contract needs to be registered with the Securities Exchange Commission, according to like these laws that are written in the 1930s and 40s.
Yeah,
So
I think a lot of the laws
that's
are
all
getting
just like public
too.
knowledge. And like Bittrex did the same thing. They just like, offered, they basically ran illegal securities. So like these are technically illegal, but it's like they're only cracking down because of these recent events, and that it's a hot topic, and it's like it can be a political thing. And it can be a way to garner support, or, for your constituents and all that. So it's kind of like a bargaining chip, in my opinion.
Yeah.
I'm not really concerned about like existential risks when it comes to crypto and regulation and banking, because the devil's advocate of the banking situation is you signed our terms and agreements, you signed our terms and conditions, you read them all technically, you agreed to this. We can, refuse service to you if we seem that your accounts are sketchy, and that's like written in the law. So no one reads that, but that's the case. So they can just stop your accounts whether you like it or not, and then they're a private company or a public company, but then you can just choose the other 10 or 20 other opportunities out there too. So I think that yes, some banks dislike crypto and banking and the banking relationships more than others, but there's always going to be some that are going to find that niche and try to solve that problem for people, because there's money and there's opportunity there, right? And at least in this capitalist society,
I think they're trying to
I
paint
don't want that.
Yeah, like crypto in a bad light, and my sixth sense is telling me that this has been like part of a plan, like politically or otherwise. That there's too many connections between what happened with FTX and who's in charge. To just seems very it's just uncomfortable for me. I think and just the way that that bank, I think it was Signature or Silvergate, one of the two, they were like days away from getting some sort of approval or something that was going to allow them to not go bankrupt, and then that it was put on the backlog so that they would go bankrupt. It's just like there's too much, and the same people were like heading up and running that bank that were part of the 28 banking collapse with either Lehman or one of the other companies. And if you look into this stuff, it's just like there's too much information that's saying that there's definitely a group of people that is against cryptocurrency, and that I think effectively what's happening is the people in power are seeing that they're being rugged in terms of where the financial power is going to be in the future. Due to the internet, in the same way that the internet completely changed commerce, it's now about to completely change finance. This isn't new. This is a topic we've thought about for years, but now it's actually happening, and they're on their back foot because they're like, oh shit, we got to do something about this. So I think this whole explosion has been in plan for a couple of years, and but at the end of this all, I believe that that crypto will have its day in the sun, and especially with an incoming new U.S. administration. I believe that we just have to make it through the rocky times of the next year and a half, and then things are going to get a lot brighter. And if they don't, cryptocurrency will leave the United States and will go somewhere else and flourish, because it already is.
And I don't think that any politician wants to be responsible for driving away that much economic energy overseas. We can't afford it. We have a lot of debt. We need to have the innovation here, and we need that money to stay in America. So, I mean, I think in the long term, I'm not nervous, but gosh, it's a little bit. I do watch it closely.
But like ultimately, the punishment hasn't been that severe. Like, what's the worst thing that's happened to someone? in the US at least, like Brian Armstrong. What's happened to him? Nothing. Even CZ's still technically free and doing whatever, right? Like nothing really happens at the end of the day. It's just some fines. Maybe they'll write a new law in. They'll change some regulations. Maybe they'll make you sign some disclosures if you have to. It's just you understand the risk or whatever that case may be, right? Who knows? We don't really know what's going to happen, but like it's still going to exist. It's still going to operate no matter what, right? Like it's 24/7. It's global. It's a phenomenon that's already out of the bag. It's out of Pandora's box. There's no putting it back in. It's too late. It was much easier to crush crypto back in 2013, 2014. But 10 years later, it's kind of way too late, and everyone has bags, so no one wants to shut it down because they have financial incentives to not shut it down now.
Did you guys see that the U.S.
So-
government dumped 10,000 BTC yesterday? Or was it yesterday or the day before?
That was yesterday?
They have like 40,000, and now that's the second bag of 10,000 that they've dumped, and it's doing nothing to price. Price is just holding. It's like, you
Yeah,
dumbasses, you're giving away all our power.
There's definitely some bid support on ETH and Bitcoin lately, for sure. Even despite the unlocking of the staked ETH, it's been pumping despite that, and the ETH BTC ratio has been increasing.
Yep.
And I was talking to Korypto about it, but I'm so bullish on ETH now after the Shanghai upgrade, because now you can take it seriously from a true like fund standpoint. Like you can take ETH seriously and staking and unstaking seriously, because you know that you can actually do it and it works, and you're earning yield basically on your coins. So now that people can trust it, so yes, of course, people are going to unlock and sell or do whatever they want, but I think in the long run, and even in the mid to short term, probably the bid support is going to outweigh the selling pressure, because so many people are going to buy it, stake it, and just like set and forget it, and put it on their balance sheets, or just use it as an asset that they want to hold for the long term. And then finally, like as we all know, earning yield on your coin trustlessly is a very nice thing. So, and I have to remind people that anything that's good for Ethereum is good for Hex, because Hex runs on Ethereum. Hex uses the security layer of Ethereum. So any upgrades and things that go well is great for us. So we should be rooting for that. And Shanghai going well is a great thing. And also it may help the development of PulseChain indirectly or directly. That's to be determined. So,
I hate for you here what you were saying about the supply. The supply is basically decreasing, and you can see that based on the rate of decay right now, that we're going to burn $1.9 billion of Ethereum per year, based on this current rate of burning. And if and when you get coins like Zen out there, that's literally burning ETH to oblivion, and it's the #1 most burned ETH contract. Like any success that has is going to amplify the result here in the amount of ETH burned per year. And so I just see it as it's a one-way train to 5K ETH sooner than later. It's and I was just looking at the ETH BTC ratio. It was just such a nice explosive move off that level. Up 13% into the 0.07 per BTC per ETH. So this level's holding. It's just it's a technical. It's holding well, and I'm super bullish on ETH because I believe more in supply and demand economics than I believe in anything else. No narrative is going to change the actual user adoption, demand, increasing active wallets, things like Hex on there that's creating store of value on the chain. So I'm super bullish on Ethereum. Not that I'm happy that the price is going to go up. I actually think ETH is better when the price is down because Gwei is cheaper, but it is what it is.
But don't you think they'll solve the gas issue eventually?
Yeah, maybe they port it. Maybe they make another layer, right, or
I mean,
something.
he announced formally that now that the Shapella went well, that their next focus is to work on the gas fees.
Okay, that's good news.
Yeah, it is.
I mean, I think it'll happen. I just don't know when, right? And so until that happens, PulseChain will be a nice, parallel system that we can use in concert with ETH, right? And just there's going to be the bridge in between.
Yeah, agreed. I think it's going to take a while, but I have confidence it'll happen eventually.
So in terms of what you were saying about 2019 ETH, and this being a lot like that, based on this channel right here, I would say that we're still not there yet in terms of where ETH can still go before Like my breakout target here was roughly 3,200. So before
Mhm.
this even sees a pullback on this ascending triangle. But that's just, you know, my analysis and what I'm getting. So I'm very bullish on both Bitcoin and Ethereum right now. I think that they can head higher, and that any kind of pullbacks are pullbacks to buy, or like for investment longs. Because even if you did peak, let's say on ETH at 3,200, let's say, and it came back to 2,000, that probably holds, right? Or 1,500 would be like a wick low that will hold. And same for Bitcoin. If Bitcoin goes to 45K, maybe even goes for a triple top, you know, into next summer potentially, and then sets up that recovery level going into 2025 and 26 for the real run up. I'm just so bullish on these longer term timeframes for this stuff. And so, you know, if we really do get a PulseChain launch sooner rather than later, you're still going to capture a lot of overflow off of a rising Bitcoin and Ethereum into PulseChain.
Yeah. I see Ethereum as a gateway to Pulse and also to Hex. So for people who are nervous about getting into Hex because they just think it's not been around long enough, or just because there is, you know, still negative, whatever, negative, you know, information out there about it that's false, obviously, then I think Ethereum's a really good gateway. And you get them into that, and then they see the value, and then they start to trust it, and they get in the system, and they see that the opportunity really lies with Hex and then with the Richard Hart ecosystem, and then, you know, you just go from there.
Mm-hmm.
So I think when ETH does well, that's good for us.
Mm-hmm. Especially like when you figure in like Hart's law. So if ETH is rising, because Hex and ETH are combined together by the same pair, it's gonna have us pulled up with it. And it's actually that same thing happened with the USDC. So when USDC depegged and went from $1 to 91 cents, Hex actually rose in price just naturally. So during this phase here, look at the volume down here. There's almost no volume coming in. From this point here, the depeg happens. All this price appreciation in this zone was on zero volume. That was just depegging of the USDC. So because dollar was falling, Hex was stable, but it was going up in dollar terms just because it's an imbalance ratio. And then you got the guys that came in and started to pump it. And look at the return that, you know, after people are like, oh shit, my dollar is losing value like noticeably right now. I'm gonna get out of it and get into Hex. And then Hex moonshotted off that level.
So
That was a
go ahead.
that was a super easy arbitrage play when it happened, when Tether and USDC depegged. It didn't make any sense. It was obviously a scary time because I think that was when the Silicon Valley Bank thing happened, and it was over the weekend too. So people were like freaking out, what's going to happen? And I was kind of scared for people too. But it was like the easiest depeg because like Jeremy Allaire was saying, like, we're gonna honor redemptions 1-to-1 on Monday. Like, we keep saying it, and then people kept selling it down. You know, even USDC was like pumping into like 95 cents, and then people would sell it down to like 90. I was like, I don't know what the hell people were thinking, thinking it was going to collapse. But yeah, that was an interesting time a few months ago, right, or a month ago.
Mm-hmm.
Yeah.
Were you going to say something? Korypto?
Yeah, I was going to say, Axis, that when I caught up with John yesterday, he has a lot of interesting anecdotes and stories about, and some insights from he's in a chat with devs and with Richard. So about the incentive token and about PulseX.
Yeah, let's talk about it.
All right, let's talk about it. So I mean, do you want to talk about the incentive token or PulseX?
We'll talk about
Incentive token? Okay. So the incentive token, some of the code is out. I'm trying to find the link for it, but it inflates at like 31 million coins a year. So we know that for sure. It's gonna inflate like 1 coin per block or something. It's a high inflationary coin. But the question becomes, you know, which pairs do you incentivize, and which pairs do you incentivize the most? Which pairs do you incentivize at all? And which coins is it going to have liquidity with at launch too, right? So my belief is that we want the success of the incentive token is actually very important to PulseX and the whole farming ecosystem. I think it needs to be paired with certain coins. It needs to be highly incentivized so that people either buy it or they acquire it somehow to then farm it and compound their fees. So I think that you definitely have to incentivize some of the people bridging over ERC20s into PulseChain. But then also the question is, I don't know, I could throw this to you guys, like, should we even incentivize the PLS-PLX pair? Or is that going to be already a heavily provided pair by itself? What do you guys think?
I think that's going to be the most popular pair. So I don't know how much further incentive that it needs. I think maybe would be interesting to look at incentivizing other pairs so that you can have more adoption on the system and the network effect can take place.
I didn't think about that. Who designates how that's distributed, incentive?
Yeah, good question. Good question. So we don't technically know, right? There's been talks of maybe you could have a DAO that would then kind of decide that, but then some people have like ethical and philosophical issues with DAOs. And it's hard to do it trustlessly because you have like an emission schedule, right? And it's like you want to have moving
what
parts.
the goals are. If the goals is volume, if the ultimate goal is more volume on chain, then you'd want to incentivize the chains that are like almost like it was a rotating thing that you'd get more incentive for more volume per coin, and that would be automatically shifting focus as volumes floated from one pair to the next pair to the next pair to the next pair and then back to the original pair. It would almost be like a circular loop of chasing yield on incentive token wherever it was most hot at that time. And it would kind of create a circular loop of whether for better or for worse, a casino environment where the volume would always go, in terms of returns for LPing, would always go to wherever the most activity was.
Interesting. It seems technically difficult to do. Adjust it in real time. Maybe you could rebalance it every like week or month or something. Maybe do like a rebalancing schedule, automate it or something. But yeah, like these things, are tough to decide, right? Like there's only a certain amount of inflation that can be paid out. There's going to be a lot of pools. Some communities may just come over, dump their coins, try to extract some PLS or whatever coin they think of that has value, and then just dip and never come back, right? Do you want to just keep rewarding those guys or those communities? But yeah, the continuous volume thing is interesting because it would reward only people that have continuous volume.
You don't want incentive coins ending up in the hands of people that are just coming over to play the game and leave and then take the free money, right? So you definitely don't want to incentivize that kind of behavior. But what if you can get a percentage of them to stay? So like, what if the Shiba Inu had the most users coming into it onto PulseChain, and so there was like an element there where you could get them to stay. Like, I guess how you keep them, I'm not sure, but I definitely don't want to give coins away for free, because we've seen how that worked in the past with BTC free claims for Hex. That this wasn't a very price positive thing.
For sure. Yeah. I mean, in retrospect, the Bitcoin free claims were not that. I don't know. You could say that it brought people in that otherwise wouldn't have heard about it, and then they became, whales in the system, you could argue. But for the most part, yeah, most Bitcoin free claimers just dumped immediately after like a year or so.
There was also something to that where I'm just going to use Zen as an example because it's a hot topic right now. Like, there's so many new people entering that ecosystem just because it's freemium, and like freemium is a thing that even RH always talked about being a successful method of distribution. With Bitcoin in the early days, you could just plug in, turn on your computer and mine it, and then get some exposure. And then if the price went up, you'd really see it then, right? And so maybe there's an element there. Not to say that you should give incentive token for free, no way. But that just in general, when you're designing tokenomics, that there's a level of there's something there to that whole freemium aspect. But if it's going to be stable distribution of inflation, so it's 31-ish million per year, that's super bullish for price, I think, because if you're talking millions of users and 31 million coins, that's a very one-sided dynamic where there's just not going to be enough incentive supply, so that price should hold up quite well. So I think they've nailed it in terms of like what the coin will inflate at per year.
And there's a burn function, isn't there, John?
Yes, there's a burn function that can be utilized in the future. I think for certain projects could like utilize it, I think, and not 100% sure, but yeah, that's kind of cool. Um, PulseX is going to have some single side staking for sure. Some of the pairs, just to throw out there, that were kind of brainstormed to be like incentivized for the incentive token were PLS, EUSDC, so PLS and stables, PLS and wrapped Bitcoin, PLS and EHEX, eUni, Sushi, YFI, SHIB, Maker, Comp, Link, SNX, Trailer, 1inch. So, you know, it's kind of more DeFi projects, more, yeah, that have a lot of users. But still like up in the air, right? It's like
Should there be an emphasis on like stable coins? Like for example,
that's
wrapped DAI coming
that's
in?
some people believe that that should be incentivized. I think it should definitely be on the list, but how much is up for debate, right?
Right.
Some people want to really heavily incentivize that
Yeah.
because on PulseX and basically in PulseChain, you need like a dollar value eventually, right? Like things need to be valued in dollars. And how do you do that? You're going to have to bridge in stables, probably USDC, EDI, stuff like that, until there's a native stable that's trusted and works and has time tested and battle tested, right? Unless, I mean, people will speculate on native stables regardless, but for me personally, I'd rather do tried and true, you know, stables, especially since what's happened in the last 2-3 years. Can't really do enough due diligence these days on stable coins now. That we have, it's sad that we have to do that, but that's the case in crypto. So yeah, just kind of thinking about like how to craft PulseX and PulseChain to be the best at launch, and then obviously everything working. But another key thing is the bridge working, right? Because who's going to want to transfer in hundreds of millions of dollars of value into a new chain unless the bridge is legit and does exactly what it says it does, and it's like as trustless as possible, and quick, of course, too. That's bridging assets and taking hours. It's stressful.
I'm wondering if there's not some sort of benefit to incentivizing wrapped stablecoins early on for sure. To be paired up against, this is the question, is do you try to pair it up against some form of a native stable and incentivize that, or do you incentivize just keeping them tied to PulseX and PHEX, for example? Or do we find stability in EHEX being ported over and wrapped? Like, where are we going to get our stable unit of account, right?
Mm-hmm.
I know there's people talking about creating, this is kind of outside of the scope of this conversation, but people talking about creating a T-share backed stablecoin that you basically borrowing dollar value into the now moment by encapsulating T-shares that are way out 15 years or whatever, however long into the future. And that you only get liquidated on whatever was borrowed in the event at the time that stake matures if the dollar value isn't par or above the dollar value that you borrowed, something like that. And other people are trying to attack the same problem in a different way.
I think that's so interesting. I hope that comes to fruition.
I hope so too. It'd be awesome to be able to do this where we can, the ultimate dream here is to find stability in DeFi without having to be tied back to the dollar. And I always tell people, like, my version of the world that I see us heading toward is one where, the dollar will be here for our lifetimes, just the same way that the British pound and the franc and all these other currencies that have been around forever have changed form and stayed around forever. But I think the world mindset needs to change so that we denominate the world in BTC, ETH, HEX, PulseChain, whatever it's going to be. The difference is that changes the world at a rapid rate because, what was once and during one epoch, one Bitcoin, you could buy a bunch of clothes. Then the next epoch, you could buy a car. And the next epoch, you could buy a couple houses. Like, it just, that drastic change in value over such a short time frame is what makes it difficult for regular people trying to be active in commerce in the real world, value the world in that. But if we don't become natural speculators and act in these systems, we will get beat out and beat down by inflation and just watching your purchasing power get degraded into nothing. And so we do need to find solutions to these problems in cryptocurrency.
Yeah, I agree. I agree. That's one of the things I wanted to talk about was inflation, and the macro, a little bit, because I think you want to talk about like state of the markets and stuff.
Hmm.
And Crypto and I were talking yesterday about it, and for me personally, like how I think about it is right now, like the two big things are the two big I's, which is inflation, of course. And the last reading came out at like 5%. So that was still relatively high in regards to the target of 2%, which is what the Fed is trying to get to. So that said, the other I is obviously interest rates. And, I can kind of foresee another maybe 2 to 3 more raises the rest of the year, maybe smaller raises, maybe 25 bips. And then sometime maybe pivoting. The optimistic time optimistic viewpoint would be that potentially the Fed stops raising rates by the end of the year, um, or maybe into early 2024. Um, so if that's the case, that could put some downward pressure on a lot of the markets, including crypto and stocks, if they keep raising. But then once it does pivot and once we do, they start turning the money printer back on, then it could be a very nice bull market again, though, which might align with some of your charts and some of the timing. Of like maybe a potential breakout or potential new price discovery once those things start to happen. But right now, on like in the bond market, the yield curve is inverted. I'm sure you guys know what that means. So that usually signals a recession, and a lot of people are just putting money into 3-month T-bills, which are earning at over 5% interest rate right now. Right, and, like, that's like the safest investment you could make. You can earn 5% basically annualized. So people see a lot of value in that, and when people see a lot of value in that investment, when the 30 years at 3.8%, then people are going to rush into the short-term bonds, and, and then they're going to rush out of things like stocks and crypto, right? Because they're going to go into the more conservative if they think a recession is coming. So that's kind of where we stand, and I think that Bitcoin probably would have hit 10, 11K if it wasn't for the money printing and the inflation that we experienced since COVID, especially when it really took off and they increased the money supply and really just started printing like crazy. So I think in real terms, Bitcoin probably hit 10, 11K if you factor in inflation and the increased money supply. So
I got
if
a
you
chart
want
for
to,
that.
I'll stop there because that was a long, long little rant.
Yeah, I got a chart for that. So look at in terms of money supply, M1 money supply, Bitcoin did hit what was the same as the 3K bottom on Bitcoin back in 2018. So this was 3K bottom on Bitcoin. This was 15K bottom on Bitcoin. So it's showing you that we hit the same levels from a structurally on the price chart when you compare Bitcoin's price appreciation against the total money supply, M1. So that's pretty cool. Like you called it. Like I think we hit those levels when you factor in at least the number of dollars in existence. And it's kind of funny because you got the same play happen 3 times. You got the triple top here. This was 14K BTC, this was 64K BTC, and this was 69K BTC. But it all equated to like one triple top right across this level here.
Wow.
And then in terms of bottoms, you had 2018 bottom, 2020 COVID crash, and then the most recent bottom. So it's literally just been a wash, rinse, repeat play for now this whole 6 years that it's been going on since 2017. Yeah, this will be year 6, so pretty crazy. It's just been trading in this range, right?
It's
Looks
a
like we're
great chart. Yeah, I've never seen that. That's really cool.
so it looks like we're coming up to test a high, at least in terms of that. So, again, I'm bullish on crypto right now, for even higher prices. I still think Max Payne is the upside from the perspective of think of all of the football players, musicians, high net worths that were invested in FTX and lost everything, and now the market is punishing them by making them buy higher now because they want their
Yeah,
positions back, but they're out what they had, and so everyone's scrambling to get money wherever they can to get it back into the market. And this is like one of those things I wanted to talk to you both about was in terms of bringing money into the cryptocurrency right now. Are you seeing difficulty in doing that, or have they changed your onboarding limits and stuff? Because in the case of some people that I talk to, and then DCC Dollar Cost Crypto has spoken publicly on this, how his withdrawal or his deposit limits have went from $100,000 deposit limit down to 5K deposit limit. So what I think this is effectively doing to people, and I want to know what you guys, if you've heard similar things, is it's restricting the amount of inflows into cryptocurrency during this time of crisis in the banking world. And that will create some sort of like a built up high pressure cooker container of money that wants to come in that's being limited, that could cause this surge up in prices.
I think that the friction that it is, the amount of friction that there is to get in and out of crypto is an ongoing problem that hasn't been solved yet. And I think that that's really hard to onboard people. Just to when I had friends that I was trying to get to sacrifice, some of them lived in Hawaii, and they were limited by Coinbase, and they could only bring in or buy $400 of ETH per week. So they were hardly able to put any into the sacrifice, even though they had money to put in and they wanted to put in a lot more. And so I think that that's an issue. But what we were talking about yesterday is, chicken and egg, right, John? Like, you think, okay, that's stopping adoption, and it is. But I think, John made a really good point yesterday that when there's a bull run and the price is going really high, people will get in. They'll find a way. They'll figure it out, just because they're going to chase the opportunity. But at the same time, I think that we do have to really look at, how are we going to solve this problem? And I don't think that anyone's cracked it. The friction is bad.
Yeah, and I also, with that, I think there's people working on like 0x Coast and others that are working on, and Rack and Rochelle also working on their own on-ramps into PulseChain directly, which would be really, it's something that we need if we want to see quick adoption of PulseChain, is we need direct fiat inflows into PulseChain. And that really could be the thing that backs that ecosystem. What do we need more than anything on that chain is a stable coin that's native to it. And so if they're able to accomplish both a fiat on-ramp and a stable coin all in one swoop, you'd basically be cornering the market. And with a sack size that big, those are the kinds of guys that are going to be in a position to do that.
Yeah.
They're able to achieve that. I really do. I think they will.
Yeah, I agree. That would be huge, and that would be awesome to see. But yeah, regarding the bank stuff, that hasn't been really my experience. Obviously, there's going to be a lot of individual variation between your bank and your relationship and what state you live in and all of that. But for me, like wire transfers and all of that has not been affected at all. ACH still same, hasn't been affected. So it also depends on how long you've been with them, and the level of verification you do. But yeah, if you can't find a solution, then usually there's, talk to someone in the community. There's usually other options out there, and it's a good idea, generally speaking, to have multiple fiat crypto to fiat relationships, so that if one does shut you down, you're not just totally screwed and can't get any money out of the system. So that's just a good practice to have in general. And the same goes with banks, and just who you bank with, right? As we saw with, you just only banked with Silicon Valley, had your business there, had all your family, your kids stuff all there, and then they just rug pull one day, you're screwed. So you do want to diversify in that standpoint too, as we've kind of learned the hard way for a lot of people, like recently.
And I know that there's also products that's offered now. Crypto Coffee turned me on to like Spritz Finance, and there's others as well that you can basically just pay for your bills with cryptocurrency directly. I know BitPay card is like a direct. You don't need any real. You don't really have to show your identity too much. You just get a BitPay card in the mail, and you can load it with crypto that turns to dollars. So there's solutions that are coming down the pipe for at least day-to-day living expenses that makes crypto easier and less friction.
Somebody somebody said something about trust token. So I think was it TUSD, and I know that that's worked for a lot of people. But the trust token also does in UK sterling. They do this in euros, so you can do it outside of the US as well. You can use it.
Yep. It was Funding Jim that actually made me aware of trust token, and that he used that to bring in, especially for high net worths or, people trying to bring in 6 figures plus. It's a lot cheaper and more efficient to bring in through those methods, and it clears in like 2 days. So you're not you know, when things are pressing and the market's going up, you don't really want to be waiting 14 days for your money to come in through Coinbase. Now, I don't know that's the case for everybody. John, I don't know if you use any, what exchange you have to tell us, but just like when you're wiring in money, it's cleared within 2 to 3 days. Yeah.
No, it's much faster than that.
Oh,
If
okay.
it's a business day, it's the same day or within an hour.
Mm.
So if like, for example, today, if it was business hours today and I sent it in this morning from my bank, it would show up at the exchange like in an hour,
That's
readily movable off exchange too.
Can you tell us which
I
cryptos
know.
or which exchanges and or banks? You don't, you know.
Yeah, I mean, Coinbase is the preferred one, right? I like Kraken. Richard likes Bitstamp. There's Gemini. Some people use Gemini in the community, I think. So those are ones that I think I trust and I've used over the years. So maybe just because longevity, you get a little bit more legitimacy with them. You know, I think that's definitely a thing, especially with Coinbase. You know, the more volume you do, the more activity you do and size, they'll let you do stuff. But like with wire transfers, that's never been a limit. They've never limited that. So like you could wire transfer $10 million there and they'll
Mhm.
accept it. You're just basically sending $10 million to their bank or vice versa.
I know
So
that one of the
it's
things that
been very fast.
one of the things I noticed with that was
Sorry?
they took away the wire routing number to Coinbase. Like if you clicked, I want to do a transfer in, I need to know your wiring number. Well,
Mhm.
they took it off. Like if you clicked the button, it would pull up the pop up. It wasn't there. This was during the
Really?
banking crisis. Yeah.
Oh yeah, during the bank crisis. Okay.
Yeah. So it's just funny. I mean, it was over that weekend or whatever, and then I'm sure it's all cleared up now. But it shows you the systemic risk of how fast the dominoes are going to fall if it ever gets to that point.
Yeah, pretty much. Yeah. And that's why we need DeFi, right? And that's the value proposition of DeFi. And the biggest winner of all this blowups and implosions and bear market is DeFi, in my opinion,
Mm-hmm.
because it's been resilient the whole time. Yes, there's been some protocols that have had some issues or depegging or, you know, they've been exploited somehow. But for the most part, that's all user error. Or that's like, you know, that's not protocol or code doing the problem or causing the issue. So, yeah. I think it's only gaining adoption. And I think that's why crypto's rallied since that banking thing is because people are like, oh, wow, either out of fear or out of greed. I don't know which one, but to me, I think it was probably a lot of it was out of fear. It's like, you know, I can't trust my banks anymore. I'll put it into at least like USDC or I'll put it into ETH and hold it in a wallet, you know, self-custody wallet instead of keeping it in the bank for the money I need tomorrow or next month. Or did people just do it out of greed and see it as an investment? Who knows? But we need all of those participants for it to, you know, for us to do well. So that's my take on it.
Beautiful. I have for you the U.S. Treasuries yield curve because that is something that we brought up and part of the pressure that's on the U.S. as far as like a long-term investment haven right now. We're seeing this that you're getting paid a higher interest rate for being short, and so this is like the opposite of the hex world, right? In hex, the longer you lock your money up, the better you get paid in terms of hex. In the U.S. Treasuries world, you're getting paid better to go short 2, 3, 4 months than you are to go out 3, 5, 10 years and buy bonds out here. And this is called an inverted yield curve for those that don't know. And this is bad. This is a bad setup. It puts a lot of pressure on the banking industry in general. But if I go back to like 2019, this is what a healthy yield curve looks like, where on the short end of the yield curve, it's paying you like 2.5%. And then as you go out, you buy bonds for 5, 7, 10 years and beyond, 30 years, like you're getting paid a higher interest rate. And that's sustainable because it doesn't put so much pressure on the Fed's balance sheet now for those obligations that it has to pay out to bondholders versus what's going on now, which is, you know, the opposite of that, this is why I think the money printers are getting turned back on, is because they have all these obligations to pay this high interest rate out to bondholders, right? And it pushes a lot of money into the bond market on the short end. But yeah, the goal here with them trying to decrease demand of goods and services by raising interest rates, it was to put a squeeze on people so that they'd stop spending in the environment that was in, and to make prices so high that people stopped using those things. but the opposite has happened because there was so much money that was printed that how are you going to stop it? It's like it's turning into runaway inflation. And so what you have now is like the dollar is now breaking down. And if you look at the dollar on a monthly time frame, and I turn on like the moving average here, this is a very bearish pattern. And if I a couple things I can show is the average sentiment oscillator. I've showed this a couple times in the past on here, and it's important because this is showing you data going back to the year 2000. And anytime that on the bottom panel, if I draw your attention down here, the blue line is bullishness, the red line is bearishness. Anytime the red line flips up on a positive slope, any one of these occasions, Bitcoin or cryptocurrency goes on in a bull market, basically, going back to '08. And so we've actually had that signal back in October. Bitcoin bottomed sometime around then, and so what we're looking for here on the dollar is for the dollar to go down in value. And if I turn on the Bollinger Bands, it'll show you this relationship where when the price goes below the Bollinger Bands, it typically goes and meets the bottom blue band of the Bollinger Bands. And so you're actually targeting this level here, which is around the 91 level, which is still a huge decrease in terms of dollar purchasing power. It would drop 9.5%, 9.8% to get to that level. But from a technical level, these patterns usually break down to here. This is called the broadening wedge. And so this thing could even overperform farther to the downside and get down to 2008 levels in terms of weakness in the dollar, which is what other countries want because it improves their import-export relationship with the U.S. And so we've already closed below the 12-month moving average, and anytime that happens, there's more continued downside. And right now, first target after breaking the mid band of the Bollinger Band here is 91. And so what this means for crypto is you're seeing in the average sentiment oscillator that there's going to be a bearish cross coming within the next few months. And when that occurs, you're going to see this big breakdown in the dollar, and crypto is just going to frickin' rocket. And the question is, when, how, where, and then what does that look like leading into the real bull run into 25 and 26? And how long can this downside in the dollar be exacerbated for? Another thing with that is the gold price. Gold is now at all-time highs. It's $2,000 an ounce, and this is the third time it's tapped that level in 973 days. So this is showing you that people are, and I'm talking about entire nation states, are becoming fearful of fiat. They're like, they don't want to hold U.S. sovereign debt, and they don't want to be in fiat currencies. And so their banks and people alike are hoarding precious metals as sound money in the same way that they're using digital gold and Bitcoin and others as sound money, and Ethereum now as well with its deflationary issuance. Everything is going to go up in value against something that's hyperinflating forever.
Going back to the last chart, the dollar chart, what would be the invalidation case? Let's say it goes the opposite of what you expect and it doesn't go down, it actually rallies. What could you see playing out then in that situation? Right? Let's say the recession fears were actually warranted and we're actually going to go into a deeper recession than anticipated, right? Then this dollar should bounce actually up to the upside.
Correct.
Right? And test the upper limits, right?
So, I mean, I think what that leads to is a sort of sideways action, kind of like what we got in 2015, 16, and 17 here. And you would want to see, you actually would like to see that. Like, let's say this level here holds, which is kind of like the midline. So, like, let's say 98, 99 holds. And then you come up, but you're going to eventually roll back over again, I think. And so that would mean like a fear event, right? People get scared of holding anything and they run back to dollars as a safe haven, just the same way they did during this period. And they would dump stocks, they would dump crypto, they would dump precious metals, everything would dump basically, right? Commodity prices would come down, which would be, that's the goal here with demand destruction. And a lot of that relies on what the Fed's going to do in terms of raising interest rates, right? So what you'd look for this event to occur is you'd actually look at interest rates against, let's see here. You'd look for the pivot in interest rates, and I like to compare it to, let's say, the stock market, because it's like a good indicator. So when this, let's see, put up this stock market. So it's going to be kind of hard to see. Let me shrink this out so you guys can get a real good visual. Pin scale to right. Okay, turn that off. All right, so the pink line is the Fed rates, and the blue line is the S&P. And so Notice how when the Fed pivots on rates, they just stay flat. That's when that precedes a breakdown in stocks. So when the Fed pauses, that precedes a breakdown in stocks in all cases. And so what I'm looking for is for the Fed to stop raising, but then go sideways with it. And when they go sideways with it is when I'm expecting that last flush out of stocks and then a recovery bounce. And so during this period is when you'd be looking for the dollar to go back up. So the Fed rate here in my mind is the indicator of what the dollar is going to do.
I agree too. Yeah, I think that's a great chart because it also just coincides with the macro view of they're going to have to pivot eventually. They can't keep rates this high too long. It'll cause a sovereign debt crisis potentially, and they'll owe too much on their own
continue to
debt.
expand their balance sheet and ad infinitum. Because
Yeah.
if they continue to expand the balance sheet like this since 2003, you had a stable growth all the way to 08, and then the banking crisis, bam, expanded the balance sheet, and then it's kind of on a whole new growth curve. And then Donald Trump enters office here, and he finally makes the balance sheet go flat and start to decay. And this is when Bitcoin went into a bear market, was when the balance sheet of the Fed actually went down. So it's funny, it's an inverse relationship, but because now the balance sheet's going back up, it's giving a use case for crypto again. So if you actually fix the US's balance sheet problem, you'd actually have less of a need for crypto.
Right. Yeah. But the incompetence is kind of,
We're relying on it because we want crypto to go
yeah,
up.
it's kind of the norm in this clown world. So
I
Clown
don't see
world,
that
baby.
happening anytime soon. The debt to GDP ratio is really, really high right now, and with the interest rate, it's so expensive, this debt. So like, how are we paying for it? So
yeah, it's
Yeah.
unsustainable.
Yeah.
So it has to pivot. It has to go back down again eventually. But then when that happens, then people are going to be less incentivized to be buying the short-term bonds and the bills and the notes that are all short-term because they're not going to be paying as much. So it's like once it goes back to paying 1% on those, who's going to buy those?
Right. And so then where's the yield going to be? And then if you're and you're looking in finance for yield, then you're going to look to whatever is going to outperform that, which would then be something like the stock market or crypto. So then the dollar goes down in that environment, which is my base case.
Yeah, growth would be back on the menu.
Yeah.
And growth assets would probably outperform, and holding the dollar would be kind of foolish in that scenario.
Yes.
Right.
And it's a great setup too, because was a freaking, let's see, what is this, 2002, 2022, 24-year high on the dollar. And so it's just set up for a nice drop down, right? And it's like anytime you do break this moving average, statistically, it goes down farther. And this has led to both major bull runs in Bitcoin here in 2020 and 2021, and here in 16 and 17.
Yeah.
And here was 15 coming out of the bear market bottom. So we might be in that coming out of the bear market bottom, a slight rally to retest again, middle of next year, and then crash down then. So maybe there is like the dollar tries to get its head above water one more time, and then bam, gets smacked down potentially. But we'd be looking at some of those other data points for answers there. So, all right, guys. Well, that was a really good stream.
Thank
I appreciate everybody for joining me today. Everyone in the chat, thank you for all you being here. I saw it get up as high as 250 at one point, so thank you so much. I know I've been on hiatus getting that LP course in and done, and that went really well, and I think we had a lot of success. And so if you're interested in something like that in the future, I'll be doing a charting 101 course coming up in the not too distant future by summer. And then we'll probably run another LP course. I know that there's been so many people that were upset that they didn't get on this last one, so keep an eye out for that too. And you two, I appreciate you so much, the gorgeous Korypto Stylist and the man of legend, John Wick. Appreciate you both for being with me today.
Thanks, man. Yeah, it was good to chat with you. Appreciate it. Appreciate everyone.
Really appreciated the intelligence. I think Korypto Stylist, what you bring is a level head, and I love that you haven't yet seen your first bull run, and I can't wait for you to experience the euphoria. And just promise me that you won't sell too soon, because at least talk to John Wick first before you hit the sell button, because it could go higher.
Okay, I promise.
Or you can talk to me too, but yeah.
I'll talk to both of
you. Average out.
Average out.
You average out, right?
You talk to as many people as you can, people you trust that have a brain on them, and then you find the middle point in between all the data points that you're getting. That's how I do my analysis.
Okay. Will do.
Yeah, good analysis.
Okay.
And hope all the Hexagons out there are doing great, and there'll be better times, but I wouldn't be surprised if we're still choppy across all risk assets for the foreseeable future too. So it's like, doesn't to
Mm.
me, it doesn't really feel like a crazy bull run is about to hit like any minute. It just seems like there's still some shakeout. There's still some kind of excess in the system that needs to be washed away and needs to be kind of, just time let it do its thing. And but eventually things are going to probably get better, right? And there's a lot of good things going for the economy, good things going on in the world. So it's not just all doom and gloom, right? There's a lot of good, positive things happening, and at least the U.S. GDP is actually trending up. So that's a good thing. That's a good potential leading indicator for the stock market, if you're on the optimistic side of things. So, but if there are opportunities that do come up, they could be, opportunities that you may be happy with in 2025, 2026, 2027 potentially. So maybe start planning for those years. Don't be so focused on this current time where it's not so great. Look at maybe a few years down the line and we could be in a much better situation, especially if PulseChain's out by then, hopefully.
I think
And we'll have
make
that
sure
to play
that you're
with.
positioning right. You're still at the more of the bottom half of the market than not the top half. So you're still better, slowly positioning in if you don't have any exposure and just taking your punches as you can do it. So anything else before we wrap it?
No.
That's all I got.
Good luck
All right,
with your
guys.
course. I think it's amazing that you're doing that.
Thank you.
I know the feedback's been really good. And it's so nice to see everybody in the chat. So I miss streaming.
Well, we really appreciate the new mic and you guys both have beautiful setups with good backdrops. So please feel free anytime you want to come on here and hash out the state of the markets. Just hit me up. All right.
Okay, we'll do.
All right, sounds good.
Talk to you later, guys.
Hey guys.